Good morning, good afternoon, and good evening to everyone. I'm pleased to welcome you to this month's Meet at the Expert live event. I'm joined today by Elizabeth Sipier, our Chief Revenue Officer at Legerity, an Insight software company. Hi, Elizabeth. How are you doing today?
Very well.
Great. So today we'll discuss a little bit more the modern core banking solution and the impact on a solution like Legerity FastPost Subledger. And as a reminder to people attending, you can ask all your questions in the comment section on LinkedIn, or you can send us an email at legerityinfo@legerityfinancials.com. I will make sure to answer them either during the event or make sure to get back to you after. So, without further ado, let's get right into it. Elizabeth, the first question, maybe just to put a little bit of context of what we're talking about today. So, why are banks choosing modern core banking solutions today?
I think the real driver has been the customer experience. So when you look at these modern core banking systems, they're really all about the customer experience, the agility. You know, if you do a payment on one of these modern systems, you can see it on your phone instantly. You know, that wasn't the way with the older core banking systems. So I think there's that giving the customer an experience that is comparable to Instagram or Facebook, you know, that is much more dynamic. And most of the people you meet, like when we're putting in accounting systems, they're all about the sort of customer experience, the customer journey. It's that kind of trend. But there is another trend as well. Some of the customers that are difficult to serve, maybe they've got not such good credit ratings and things like that. There is good money to be made, but it's a specialist type business. And so we start to see these players crop up in different ways. We've been working with one US or North American bank that has set up a kind of 300 venues where people can, you know, rent some furniture and take out a loan or take out a mortgage. So thinking about getting to people who are harder to serve and frankly probably higher margin for the bank themselves. So that's the first driver. I think then you've got a sort of knock-on effect that many of these challenger type banks that are giving a better customer experience are then starting to take market share from bigger players. So then you start getting the bigger players thinking, okay, I need to start playing in this space. How do I do it? And some of them have done, you know, they've just set up something for a large part of their business, whereas others will have started a slightly more agile aspect to their business and be experimenting in that way.
Okay, that's quite interesting. And so you spoke a little bit about the challenger bank and the new bank. So, but really, what kind of banks are opting for these modern systems? Like a little bit more details on that.
You know, I think really most of them, most of the big banks are looking at it, and most of the challenger banks have already chosen something. You know, we've been looking at Thought Machine, but there are many other players. We came across one, Cloud Lending Solutions, that's actually a Salesforce-based banking system, and obviously, you know, we've discussed Mambo. There are many of them cropping up. So I think almost all the challengers have looked at something like that or built something in-house, which takes you to the Thought Machine, Sterling Bank. You know, I remember years ago looking at accounting for Spotify. And when I got there, they were all programmers. You know, these are people who started with technology. And then the other players, you know, one of the famous ones was JP Morgan had wholeheartedly adopted Thought Machine. You know, we've had some conversations with other big banks that have in the public domain. You know, we know that SEB or Intesa have also, you know, started to use Thought Machine, where we're doing some integration. So it looks to me as though you've got a pattern of those banks that want to be innovative, and then those banks that have started new entrants. And then the third pattern you've got is the big core banking systems starting to modernize themselves, you know, the T24s or even SAP banking, you know, all these We all remember the Oracle purchase of FlexCube. These core banking systems are also now starting to think about how to be more agile and more modern. So that's had a huge knock-on effect across the industry.
Yeah, no, it's definitely it's very interesting to see how the banks are evolving, and when actually we think about some of the larger banks, this kind of transformation is much more complex, and the idea of being able to either start small or really deciding to go big like JP Morgan, it's very, very interesting, and different approach which require a different way of behaving and actually has different challenges. So maybe as a next questions, what are some of the challenges associated with this kind of transformation?
Yes, in some ways you touched on it. The challenges are probably more familiar to the larger players. The very large players have always had lots of integration challenges, and they understand when they've got a core banking system, or when they've got 200 or 300 banking systems or core systems, how they're going to integrate that with their whole organization, their treasury, their funds transfer, all the other bits that you need to run a bank risk. But I think that with agility and the ability to tailor products for customers comes the risks associated with that. Most of these core banking systems, they will have packaged. You can buy a package for a loan, or you can buy a package for a current account. But really, it's all about you as a customer, you as the bank, designing the products you want to define, and having this ability to do quite a lot of changes, add bells and whistles on the fly. And that has quite a lot of challenges, because you then start to think you need a lot of discipline when you implement it. You need to absolutely understand the scope of what's in this core banking system and what is not in it. So obviously we come from an accounting background, and we've had a lot of those banks that realize that there is something needed for accounting on top of what's in a lot of modern core banking systems. So you need to understand exactly what is in the scope, what you're getting out of this piece of software, and what you might have got in a more traditional banking system that may not be there. The other thing is, when you've got something that you can do a lot of change on the fly, you need to make sure that there's control and auditability. And, for us who come from an accounting background, it's like second nature. But for people who come on the transaction side, that may not be where they start. They may not think of the audit and control. They probably have a database of everything, but that's not usually quite the same as having full auditability.
Yeah, and it's actually an interesting point, which brings me to the next question. When we think about modern core banking, as you said at the very beginning, there is a very big focus on the customer experience, but actually there is a big impact of modernizing the bank in the back office, because all the back office has a very big impact on the type of product you can provide, on how you will interact with your customers. And so here, maybe just a little bit more on FastPost and or Subledger and accounting rules engines. Our expertise is really accounting. So how does FastPost facilitate a banking transformation?
That's a big question. I think one of the nice things about accounting is it's structured. It knows what it needs when it needs it. And I think that actually enhances any accounting transformation. When we do an accounting transformation, we always start with what you want to get out of it. And actually, with these core banking transformations, you've actually got what the customer wants to get out of it. So if you can try to run a project that has both ends, then I think you're probably going to have much more success. And the other thing that is really important is to know your business, is to know exactly the products you're going to offer, the customer experience, the life cycle of those products. And then that will start to tell you where with the rest of the banking features you need to integrate, where you have to integrate with treasury, where you have to integrate with whatever is your core customer. You will probably have a customer reference file. You need to think about those integrations with the rest of the bank. Old core banking systems did everything. So often they would do trading, they would do retail products, they do commercial lending, they do a whole span of activity that covered all the activity of the bank, trade finance. New core banking systems can do many of that, but very often they will only be used for part of that. So then when you need to interact with those parts of the organization, you then need to think about that in your project. And then, of course, you also need to think about how you get from a transaction-based system to accounting. So if you've got a current account, it's got debits and credits. But how you deal with the debit and credit in your current account and how you deal with it under IFRS or US GAAP or other accounting regulation isn't exactly the same. The rules that you need for accounting will differ. So then you need to have these accounting rules, and you need to have accounting rules that handle what we call swinging balances, when you go into overdraft, etc. You've got lots of different aspects of your accounting that you're going to have to take into account. So really, to think about where the accounting fits, if you can combine thinking about the customer experience and then thinking about the accounting that you're going to get out of the back end, and along the way where you want to integrate with the rest of the bank, then I think you've got a really good project.
Yeah, that's quite interesting. And you made a point also a little bit before about the old system that tend to be much more comprehensive. So if old system actually had a subledger, what replaced that today?
That is that's a really good question. Many of the large banks have already moved away from core banking subledgers. And that's because there was a lot of accounting change. IFRS came in over the years. What happened was that the accounting might have been in, their 300, 400, 500 different systems, but it was often different. And that led to a lot of problems when they tried to consolidate. Often you'd get a lot of a mess in the middle. Every core banking system would have a slightly different bit of accounting, and then a bank would have to put something in the middle. Often they'd put in some rules. Some tried to do it in COBOL, that you end up with this. And so there has been a move in the big players to put in a subledger. So a subledger is like a general ledger, but it's holding the very detailed transactions, and then it's adding them up. It's having applied accounting rules, it's then adding them up probably to whatever you've got in your general ledger at the level of your financial statements and reports and accounts, and maybe some reg reporting. So you can see, SAP has a subledger now, and Oracle has theirs, but 10 years ago they didn't. So the big banks probably have already started thinking about subledgers or implemented them already. Now, when you get into these smaller sort of Thought Machine or Mambu or other new core banking systems, some of them have got the concepts of accounting, but they're very transaction based. So they probably will not be aggregating up to your general ledger. They've probably got the data you need. You probably have to sort out exactly how to structure it into what you want for your accounting, and particularly for your reg reporting and maybe for your risk reporting. But you can do that. You can apply your accounting rules. And then if you put in a subledger, you've got a really clean architecture that goes from a really modern core banking system, really agile, into somewhere where you've got a lot of the detailed journals aggregated up to the general ledger. And then that goes to the GL. And of course, then what you've got is you can look at a balance in your GL, you can go into your subledger, you can see that balance there, you can see the actual journals that it generated, and then you can go back to the transactions and their associated data that came from your new modern core banking system. So and we've seen a definite trend. We've had a couple of players who've come to us whose auditors don't particularly like what's coming out of their new core banking system, or who actually they've thought about putting in a database to aggregate up to the GL, and then of course you've lost your audit control.
Yeah, no, that's very true. And to one of the points that you made a bit earlier on the also the importance of the accounting rules and being able to actually build those accounting rules and then do your different reg reporting under IFRS, US GAAP, and all of that in a subledger. This is another dimension that is goes beyond the simple subledger that actually some of the main companies like Oracle, SAP tend to offer. The accounting rules is an important dimension that we often address with our customers.
Yes, and actually one of the other things that we've talked about before, now you're in agile, modern core banking systems, you're talking about change. You're talking about reaching hard to get to markets. And you really need accounting rules that are very, very transparent for your auditors, but are actually no code. You want to be able to actually edit the rules, change the rules very easily. And we've probably mentioned it before, but in FastPost, you've got this ability to use Excel-like logic so that the accountants can actually say, well, this kind of client, you know, he's a higher risk. I want this set of parameters because I'm going to integrate with this type of risk reporting. And you can write some logic in there to enable you to not only post the journals to a particular ledger or balance, but also to have a dimension that's held at a risk factor, whether it's, you know, his loss given default profile or maturity profile, etc. of the debt.
Yeah. Okay. Makes a lot of sense. So there is another question here. What about FX?
Foreign exchange is always important in banking. You know, when people think about it, you know, even small players, you know, recently we've been talking to somebody in the Middle East, you know, and of course they've got their local currency, but they've got dollars, you know, so many countries, you know, they're giving their clients options to do things in multiple currencies. So it's really, really important to have the transactions might come in whatever currency they're done in, but somehow before you get to the general ledger, you've got to make sure you've got an FX translation to the currency of your ledger, or maybe even a reporting currency. And you might have multiple entities. You know, you might have a local legal entity that's operating in, I don't know, Bahraini dinar, and you might have a parent that's in Cyprus or somewhere, you know, operating in euros. So you have to have that ability to, first of all, get from your transaction currency translated into an entity currency, and you might well have to think of another currency for your parent entity. And these are things that you don't traditionally get into, or you don't typically get now in one of these new core banking systems. It's not generally part of that architecture. So first of all, that's the thing you've got to manage in the FX for all your transactions. And then actually you've also got to think about, you know, you've got period end, you've got FX gain, you've got all of the sort of management of FX itself. And that, you know, traditionally is in a treasury function, but these will be balances that you're having to manage within your ledger or your subledger. So there is quite a lot of thinking needs to be done around FX that just simply isn't in a normal, innovative, agile transaction-based system that's very focused on the customer experience.
Okay.
And maybe that's not the right place for it. You know, you can do a lot of this stuff in the accounting, and further on, you know, you have a treasury system and you will do a lot of work there. And then that can be aligned with your you know, retail banking or commercial lending activity.
Yeah, no, and that's very true. You know, nobody pretends to do everything. So doing the right thing in the right place, but being able to do it quickly, fast, without the dependence on IT, and a solution that is easy for people to use, while having the right audit and right control. Because if you do something related to accounting or anything that is related to bank, you need to have a very strong control over what you do. Now, maybe one last question, and that could be a very big one or a short, but why is a subledger a better solution than just adding debit and credit to a warehouse post to post on your new system?
The obvious answer that we've touched on is a subledger is an audit and control double entry bookkeeping architecture designed for accounting, and it is always better than a warehouse for traceability and auditability and managing, you know, journals and manual journals and adjustments. Every bank has adjustments at the end of the month. All these things need a lot of audit and control, and ideally in one place, because then you're only adjusting, you know, in a central controlled area. And so the subledger is obvious for that. But data warehouses have places to play. You know, we're talking about building much more agile customer experiences. And although in a subledger, you can hold a dimension of customer profitability. You can have a P&L by customer, you can have a P&L by product, you can have a P&L by channel, you can have a P&L by branch. However, there is a lot of power in a data warehouse to really drill into which parts of these new businesses that are profitable. You can pull in, all the activity-based costing, all the hours by people, etc., and you can send those. You can have lots of complex data warehouse type processing. Teradata typically has been used in the past for this kind of stuff. And then you can send that up so you've got your reporting at the customer or product line profitability. But I think we shouldn't underestimate, now we've got all these brilliant transaction-based, very low-level client-facing systems, the power of what you can do in a data warehouse. And the other thing is we tend to put a lot of data from our subledger into a data warehouse. There's another great gain from having a well-managed data warehouse, and that is the alignment of your management reporting with your financial reporting. So if you can actually use the balances in your subledger and then combine them with other data in your data warehouse, then you can get people in the business, the whole performance management of the business much more closely aligned, not just to your subledger, but actually because the subledger is feeding the general ledger, then you've got managing your organization against your reported financials. And that, of course, is really, really important, so that you don't have, the same profitability you're seeing in your ledger. Years ago, I worked in the trading space, and all traders had their version of the P&L, and then you had the finance version of the P&L, which had a huge impact on bonus discussions. So you can see significant benefits if you can get all that aligned. So I wouldn't sort of say that, we wouldn't recommend a strong data warehouse strategy, but it's not the same as what you get from your general ledger.
No, and that's actually a very, very interesting question that was asked here, which we could spend hours on that, because it's a constant discussion with the data transformation that people are going, the parallel between data transformation and finance transformation, and how actually the two are one and the same but needs different type of approach. It's quite interesting. Thank you very much. So those are like all the questions that we got for today. Maybe just I want to thank everybody for attending today's session, and I want to thank you, Elizabeth, for all your great insights. Maybe you have any concluding thoughts on today's discussion?
I think your last comment is very, very important. When we're talking about modern core banking innovations and those systems, and we're talking about accounting, what we mustn't forget is the whole data model story, metadata, understanding what data you've got where, because that's another part of actually building an agile business, and particularly with the regulators, making sure that your whole understanding of your data is very powerful. So there's so much you can talk about as banks start their finance and data transformations.
Definitely. Thank you very much, Elizabeth. So this brings us to the end of today's sessions. So for anybody who wants to ask us more information, you can get in touch by writing to us on info@legerityfinancials.com, or just go on our website. There is easy link to get in touch with us. Just to finish, one last word about FastPost. FastPost is the next generation accounting rules platform. It's designed and developed for large volumes of complicated data and processes. It's a cloud-native, ultra-high speed performance built with the latest open source technology. And really your goal is to give power to the finance department to control the accounting process and being able to do more and drive finance transformation. So if you feel that there is a strategy that aligns with what FastPost can do for you, we really invite you to either connect with us directly via the email info@legerityfinancials.com, or simply follow us on LinkedIn so you can get access to the latest webinars, latest white papers, or any of the future Meet the Expert events. So on that note, I just want to thank you again, Elizabeth. Thank everybody for attending, and wishing everybody a very good rest of the week. Thank you.
Thank you.
FastPost is the next generation accounting rules platform. Cloud native, ultra-high performance, developed using the latest open source technologies for large volumes of complicated data and processes. Finance departments are under pressure. Legacy systems are creaking, inefficient, and error-prone. Forward-looking CFOs are driving change. Finance today is more than just accounting. Multiple stakeholders, clients, regulatory challenges, and the new digital world need a single version of the truth. Granular, accounting-validated data on demand. FastPost is modular, fully integrated with open interfaces and APIs, and the ability for user-defined business rules. Setting the standard for the next generation of accounting rules and subledger technology. We shorten processing time from days or hours to minutes. Offered both as a software and platform as a service, providing flexible and rapid deployment options to match your business needs. FastPost. Finance with confidence. Legerity. It's our business to take care of yours.